Links oil and food prices. Much of the roller coaster has had to do with oil. April and May 2020 saw Brent crude prices crash to an average of $25.27 and $35.33 per barrel, respectively. In October 2021, it was 84.38 a barrel. Last week, the UN Food and Agriculture Organization released data showing its World Food Price Index FPI averaging 133.2 points in October, the highest since July 2011. No less significant, though, is the way that the FPI has oscillated since the outbreak of the COVID-19. In May 2020, when the global economy was in doldrums, it had collapsed to a 4-year low of 91.1 points. From there to a 10 and a quarter year high now has been quite a climb. Much of the roller coaster has to do with oil. April and May 2020 saw Brent crude prices crash to an average of $25.27 and $35.33 per barrel, respectively. In October 2020, it was 84.38 a barrel. Fuel and food. One reason why petroleum and agri-commodity prices move in tandem is the biofuel links. When crude prices rises, blending ethanol from sugarcane and corn with petrol or diverting palm and soybean oil for biodiesel production becomes that much more attractive. Cotton likewise turns relatively affordable vis-a-vis petrochemicals based synthetic fibers. Also, since corn is primarily an animal feed, its diversion to ethanol leads to substitution by other grains including wheat for livestock use. That then pushes up prices of food grains as well. The same happens to sugar as mills step up the proportion of cane crushed for fermenting into alcohol. The results of these can be seen in the table. Palm oil prices in Malaysia are currently at over 5,070 ringgits per ton, with the most active traded futures contracts at the Bursa Malaysia Derivatives Exchange hitting a record intraday high of 5,090 ringgit on October 20. On November 1, the benchmark wheat futures contract at the Chicago Board of Trade closed at $7.97 per bushel, the highest since December 19, 2012. The present global cotton rates of 125 cents plus per pound were last seen in July 2011. Corn and sugar prices too are ruling way higher compared to a year ago. But it isn't the biofuels effect alone. Large prices increases also tend to rub off on other farm produce through creation of positive sentiment. The skimmed milk powder prices averaged $3.627 per ton at the global dairy trade online portal's latest fortnight auction on November 3, the highest since the $3,810 of July 1, 2014. International coffee prices have been doubled in the last year and like most other agri-commodities also strengthened along with crude oil in the last 3 months. Economic activity and stimulus sentiment is in turn connected with two things. The first is of course demand returning with revival of economic activity worldwide amid receding pandemic cases and rising vaccination rates. The second is the flood of liquidity unleashed by the US Federal Reserve and other global central banks to limit the economic damage wreaked by COVID-19. The US Fed's total assets, mainly government bonds and mortgage-backed securities that it buys on its balance sheet, has expanded to 4,241.51 billion to 8,574.87 billion between March 2, 2020 and November 1, 2021. All this money combined with the policy-induced ultra-low global interest rates has found its way into stock market, startup investment and also commodities. And since its restoration of supply chain hasn't kept pace with the demand recovery, manifested in congestion at ports, shortage of shipping containers, vessels and laborers yet to fully return to plantation, the overall result has been inflation. Impact on farmers. But has the surge in international prices benefited producers, especially farmers, to some extent? Yes. Kapa's raw ungained cotton is today selling at Rs 75,000 to 8,000 per quintal in Rajkot market, Gujarat, well above the government's minimum support price of Rs 6,025 for long staple varieties. Soybean growers are similarly realizing Rs 5,000 plus per quintal rates in markets such as Ujjain, Madhya Pradesh and Latur, Maharashtra against the MSP of 3,950. On the flip side, however, farmers are being forced to pay much more for fuel and fertilizers as their international prices have also shot up. Diesel is now retailing in Delhi at rupees 86.67 a liter. This is a higher cut than rupees 70.46 liter a year ago, even after the centre's recent rupees 10 excise duty cut. Fertilizers. The situation is worst in fertilizers. Diammonium phosphate DAP is currently being imported into India at $800 per ton, including of cost and ocean freight. Muriate of potash MOP is available for no less than $450 a ton. They are close to the prices that prevailed during the world food crisis of 2007 to 8. Landed prices of urea, on the other hand, have crossed unheard of levels of $900 per ton. Together with fertilizers, the prices of the intermediates and raw materials such as rock phosphate, phosphoric acid, and ammonia have also skyrocketed due to combination of demand pull from higher crop plantings and cost push from oil and gas. The coming weeks will present a huge challenge for the government to make fertilizers, particularly phosphatic and potassic nutrients, available in reasonable quantities to enable farmers meet the requirement for their wheat, mustard, potato, onions, and rabi pulses crops. That would matter for food prices down the line at a time when fuel and fertilizers are also on fire. Thank you.